Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I'm just going to go ahead and review some key stocks, some key commodities, the basic indexes, and some of my most favorite trades as of right now. So without any further delay, let's go ahead and review all these key markets. Alright, currently the dollar index has been trading down for the last couple days. There has been a double topping pattern, as you guys can clearly see, and pretty much I don't see much or substantial support until we get down to this area right here for a double bottom or a potential double bottom. But for right now, I do see this downwards trend continue, but you might see a short-term pause. As you guys can see, you have almost a double top. Not really. It just seems like a couple pause days for the Euro-US dollar, which might help with the decline of silver. But silver in of itself is already in a pretty consistent downward trend. If anything, if this downward trend were to continue, it should continue lower, or should trade a little lower below this point right here. Eventually, I do see the 200-day moving average being touched, at least in the next couple weeks or so. You know, when I see the 200-day moving average touched, it could signal a reversal, or it could just be the beginning of an even longer term trend if it is able to be broken through. But usually 200-day moving averages hold, at least for the first time it's touched. That way, that's kind of why I'm thinking that if I were to exit a position in the SLV, I would just I'd basically sell my position, at least if I was short the SLV, at the 200-day moving average. So again, that's a trade that I'm kind of interested in. Once I see it touch the 200-day moving average, I might be a buyer. And if you're already short, I would definitely cover my position at the 200-day moving average. But going back to my original point on the dollar index has a double topping pattern in play. You can't deny that right now. I do see the dollar index continuing to go lower, and basically, you just got to play it by ear. Earnings are coming out for Alcoa in the next couple days, so we're going into earnings season already, and it's just starting for the Dow component in around, I believe, on July 11th. So the first component is going to be reporting earnings on July 11th, and pretty much for all of you traders out there, I'd be looking to be a buyer as of right now into this rally. Let's go ahead and review the Euro-US dollar. Euro-US dollar has been consolidating a little bit. Again, I just think that's just sideways consolidation. It's not bearish enough for me to honestly think much of it. It's just a note to keep in mind that you could see a short-term pullback, but it shouldn't be that bad. I mean, I couldn't see more than 100 pip pullback on this. So again, just note that there is a strong reason for the euro to be rallying. Greece gets bailed out on some really awful conditions, but great conditions for the people who are lending the money, of course. With as much risk as they're taking, they are earning a pretty decent interest rate, but along with it, they are also getting added measures to ensure they get a return on their investment. So again, the Greece government has to privatize a lot of their industries, well, not really industries, but utilities and different stuff that they used to take care of, which isn't that good, or at least not for the public well-being. But as far as investors are concerned, they don't care about well-being, they care about their money. And as far as what these politicians think in Europe, they don't care either. So again, Greece is a melting pot. Chances are they're not going to be able to repay their debts no matter what they do. And I think they've just dug themselves too deep of a hole. But again, as long as the hole has been covered a little with some sort of, I guess, facade, investors are, I guess, a little bit happy. So that's why going into earnings season, we're having this humongous rally in the euro. Therefore, the dollar index does weaken. And also you're seeing stocks as well appreciate in advance to what they expect earnings to be. Now, as far as silver, I maintain my negative outlook until the 200-day moving average. But moving on, I do see the semiconductors holding trust as, a really, really strong player. It's kind of what's pushing technology or tech stocks in general these days. But this is kind of also what's dragging the Nasdaq higher. But I am also looking at another chart, which is the advanced micro devices, and this is a chart which interests me because it's in the semiconductors. It's not really that appreciated. It should be moving with the sector, but it's not. One thing to note is that because it is not moving with the overall sector, technology stocks are appreciating, semiconductors are going up, but also that's kind of why I think it's a great value investment at around $6.90. There's a great area of support right here. Really good area of support. With with the overall stock market going up and the semiconductors holding trust going up as well, and since AMD is a semiconductor company, one could only assume that this stock is due for a pretty sizable bounce. Now, when I look at this, you have a 1, 2, and a third piercing. Now, and not only that, you're also getting you should get a sizable bounce off this level right here. There's no reason why it shouldn't be able to bounce. When you're in earnings season, the euro is going down, therefore the stock market is also going up off of the dollar's depreciation. Dollar depreciates, stocks generally go up. Semiconductor holding trust is going up, and we're in earnings season. The stock is also trading off of an unprecedented support level. And not only that, we have a 1, 2, and third touch break above this channel line. It's a very steep line, but that should also mean there should be a steep reversal as well. Whenever you see opportunities like this, there will be some consolidation before you see a sudden break to the upside. So again, what you shouldn't expect is a stock that's going to just consistently go up, but rather you should see either a gap up off this or above this trend line right here. Above this trend line right here, you'll either see a gap up right above it, either that, or you're just going to see a sudden rip to the upside. Which never, when you trade these channels, you're gonna see a long period of consolidation, and all of a sudden it just rips higher. I saw the same thing happen with silver. I've seen it many times over, and that's the expectations you should have with this AMD chart and with this AMD trading setup. Therefore, I am very bullish on AMD in this area. It is a great value play, and since the semiconductors holders trust is going up substantially, I can only see I see no reason, no justification for why the AMD shouldn't be going higher. I really don't see. But then again, there's no such thing as guarantees when you're trading. One should always realize that as well. There's no such thing as any guarantees. But at the same time, based on the available facts, I do think AMD is due for a major bounce. Moving on, I have to be very, very bearish on the volatility index, or just about any direction leveraged ETF that is bearish. So that includes FAZ, and the whole slew of them. And it's pretty safe for me to sell a call option at $19 and for me to expect it to expire worthless, or even at $18. Playing the house is very smart in the month of July. And also, if you buy put options, you could also make a substantial return on the volatility index as well, if anyone is ever gutsy enough to sell a substantial put option position in the volatility index. But again, I do see the directions going much lower, especially the bearish directions, and because of that, it is a very good idea to have a very strong short bias. I am definitely already kind of short this position as is. So again, I'm just going to ride this. Stocks, if they consolidate, this is the type of the VXX goes lower. If stocks were to rally, VXX would go lower anyway. So again, VXX, I'm very bearish, and for good reason. I would definitely be short. Okay, moving on. Dang Dang. Dang Dang has had a humongous sell-off, and people might think, oh, is this still one of my favorite tech picks of 2011? Yes, it still is. The main reason why I like Dang Dang is because Dang Dang's main competitor is kind of similar to eBay, and over time, when you see a company like Dang Dang, which which kind of has like an Amazon model. It is very, I guess, consistent. It's consistent at producing returns, and since there's more middle class and lower middle class in China than just about almost any other country in the world, it makes sense for people to be buying on a website like Amazon, but in China's case, Ding Ding. Now the whole entire traffic count, the traffic count since Q4 2010 has been booming. In fact, there are around 3.52 million visitors, unique visitors, per day in Q2 2011. The stock since then has gone down by half, but the growth in just unique visitors per day has gone up by 3 times since the initial public offering. And you guys are probably wondering, then if this is such a promising company, why is the stock falling? And I had to say, I saw the same exact phenomenon happen with Baidu. Baidu at IPO shot up ridiculously high. Then in the following months, it collapsed, and it fell by more than 50% of its value before rallying non-stop for the next 3 to 4 years. That's the story with Baidu, and I do see the same thing with e-commerce China Ding Ding. There's no debating it. This company is having a ton of unique visitor traffic count growth. Not only that, its main competitor, which is what was it called again? I think it's Taobao or something like that. But Taobao, Taobao, which is a very similar model to eBay. And history shows that between an eBay and an Amazon, which produces better returns for investors, and basically Amazon easily wins. So if you want to invest into retail growth in China, and at a very attractive valuation for the next 10 years, and you want to invest into a retailer, an online retailer, you get internet growth, you're inside of the fastest growing economy in the world, and you're getting ridiculously great value, it has to be Ding Ding for me. This is my pick for just best investment, long-term growth investment overall. Anyway, that does it for me for today. If you guys have any questions, be sure to go ahead and leave a comment right below my videos. I'll try to get back to you as soon as I possibly can. And if you guys want my videos, be sure to go ahead and subscribe. And if you guys want my charting software, go ahead and check out the link right below this video. Take care, folks, and I will go ahead and see you all next time.